Welcome back to Clint's AI Research. I'm Clint. We're dissecting the Hang Seng Index today, and let me tell you, this chart isn't just a line, it's a story of survival. To trade the 2026 recovery, you have to understand the ghosts of the past. We've had 5 major cardiac arrests on this index since the handover. If you aren't looking at the 1997 and 2008 bloodbaths alongside the tech wreck of 2021, you're flying blind. Let's go to the monitor. Segment, the Hall of Pain, Major Drops Analysis. Every time this index loses its footing, it's for a different fundamental reason. You want the deep dive? Here is the anatomy of the 5 biggest wipes in SHI history. 1. 1997, the currency contagion. The drop. The SHI plummeted over 50%, bottoming out near 6,600 in 1998. Clint's take. This was an existential battle. Speculators like George Soros were attacking the HK dollar peg. The HK government had to step in and buy 118 billion Hong Kong dollars worth of stocks just to keep the floor from falling out. The lesson: never bet against the HKMA, Hong Kong Monetary Authority, when they're defending their home turf. 2. 2000, the dot-com implosion. The drop. A slow-motion wreck from 18,300 down to 8,300 by 2003. Clint's take. Pure valuation gravity. We saw tech companies with zero revenue trading like they were the next gold mine. When the Nasdaq snapped, the SHI followed suit. It took the SARS outbreak in 2003 to finally wash out the last of the weak hands. 3. 2008, the global systemic shock. The drop. The index halved in a year, crashing from 31,000 to 10,600. Clint's take. This was the Lehman Brothers moment. It wasn't about Hong Kong. It was about global liquidity drying up. We saw the SHI lose 12.7% in a single day. The lesson: when the US sneezes, Hong Kong catches a life-threatening pneumonia. 4. 2015, the margin call meltdown. The drop. A violent reversal from 28,500 to 18,000. Clint's take. This was a leverage trap. The Shanghai-Hong Kong Stock Connect pump created a bubble that popped when mainland regulators pulled the plug on shadow margin lending. It was a classic, up by the stairs, down by the elevator, move. 5. 2021 to 2024, the lost decades wipeout. The drop. The index fell below 15,000, levels not seen since the 90s. Clint's take. This was the triple threat: a tech crackdown, a property developer collapse, Evergrande, and zero COVID lockdowns. It felt like decades of wealth evaporated. The 2026 AI Research Brief, the Great Rotation. Now, look at where we are today, January 4, 2026. The index is currently hovering at 26,338. After the 13% tariff panic dip in April 2025, we've staged a massive recovery. Clint's technical heat map. Indicator. Value. Signal. Current price 26,338.47. Bullish. RSI. 14-day. 66.9. Entering overbought. Moving average. Above 200-day. Confirmed uptrend. Support zone 25,200. Strong floor. Why 2026 is different. The DeepSeek catalyst. This isn't the 2000 bubble. We're seeing real-world AI efficiency. Baidu's chip unit spin-off and the DeepSeek AI breakthroughs are driving institutional buying, not just retail hype. The proactive policy. President Xi has signaled proactive macro policies for 2026. This is the first time in years the policy tailwinds are actually blowing the same direction as the technical momentum. The tariff hedge. While the April 2025 tariff shock was brutal, the market has priced in the trade war. Investors are rotating into defensive names like CLP Holdings and Infrastructure, which act as a shield. Clint's final take. The SHI is a high beta beast. It's either the hero or the zero. Right now, at 26,338, we are testing the upper bounds of a rectangle formation. If we break 27,500, we're heading for 30K. My trade strategy. We just had a 2.76% pop on January 2nd. The RSI is getting hot at 66.9. Don't FOMO in here. Wait for a retest of the 25,800 level. Buy the quality tech names, Baidu, Tencent, on the dips, and keep your stop losses tight at 25,100.